The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Before we get into the technicals, let's have a quick look at what traders are watching out there. The US will place a lower than promised 20% tariff on many Vietnamese exports, cooling tensions with its 10th biggest trading partner, just days before President Trump could raise levies on most imports. Meanwhile, House Republicans say they expect to vote tonight on Trump's tax cut bill. The bill could add $3.4 trillion to the national debt over a decade, and some hardliners have withheld their support for the bill over concerns about its cost. US private payrolls fell for the first time in more than 2 years in June as economic uncertainty hampered hiring, but low layoffs continue to anchor the labour market, and that comes ahead of tonight's key non-farm payrolls data. Meanwhile, Tesla headed for another year of shrinking sales after it posted a second straight drop in quarterly deliveries, dragged down by CEO Elon Musk's right-wing political stances and an ageing vehicle lineup that has turned off some buyers. Let's get into the technicals and the charts now with Steve Gopalan from Skanda FX, who joins me. Steve, great to see you. So we're watching very much a lot of downward pressure on the greenback.
Good morning. Thanks for having me, Juliet. Yeah, it's quite interesting that seeing the USD take a bit of sell off. It has been a couple of volatile days in the past few days. Obviously, with one was obviously Trump. The tariff threats, we had the Iran-Israel conflict. Again, markets are thrown into a bit of spin over here because the last batch of jobs data that has been coming from the US has not been that great. In saying that, Powell's been very stoic about further rate cuts. And again, I guess it's kept investors in a bit of a pickle over here. The other thing that is of a concern is that, as the chart says, the US dollar is slowly losing its momentum. It's not sure if it's a mass exodus of investors fleeing the US dollars and trying to get into other assets, simply because they're not sure how the US is going to perform in the next couple of months if the tariff threats and all continue. But yeah, so quite interesting seeing the US dollar taking a bit of a hit over here.
Indeed. Now, of course, we're looking very closely at the big, beautiful bill and what's going to happen in terms of whether or not this does get passed. It does look, as I mentioned, like there are a few hardliners really thinking this is just too much to add to the US debt situation.
Are you referring to Elon Musk by any chance? He seems to be heavily against the bill. Obviously that bill, at the end of the day, what it does is it does make Trump look really good. Obviously tax cuts coming in and all the stuff. But at the same token, it does bring a big concern, which is raising the debt ceiling. It's the US has got enough debt as it is, and just by raising debt ceiling, not sure what the outlook is going to hold for. It does make Jerome Powell's life a bit easier. If, let's say, the bill does get through it's past the Senate, now it's on the House, it gets through, maybe Trump might see it as a win and won't push Powell for a rate cut sooner than expected.
And I guess all of that pushing into as well what we saw with the momentum from the private payrolls data. We're looking ahead now to the non-farm payrolls data and what that means for the Fed, and I guess also for equity markets with the S&P at a record, Steve.
Yeah, it's been, seeing the S&P bounce back quite vigorously shows that investors are still confident that, equities is the best place to place their money. Interesting enough, the ADP data was a miss, and tonight's US non-farm payrolls would pretty much be the last case before Fed actually meets. So I guess from Powell's perspective, he was quite clear. Fed is data dependent, and if it does happen that the non-farm payrolls does miss expectations, most likely we might see market drum roll for a July rate cut from the Fed.
Okay, let's get through then to what all of this means for our dollar as well. We've got the RBA meeting next week, Steve. The weakness in the greenback, of course, good news for the Aussie dollar against the greenback. Do you think we're going to push sort of to 66, 67? What are the technicals showing you?
Well, the Aussie seems to be quite resilient at this stage. I mean, it's two factors, right? One is that we also have the rhetoric from Trump trying to push the US into a rate cut, investors, dumping the US dollar. So we're seeing a bit of risk on that front. At the same token, my view, again, it's not the entire world's view, but my personal view on over here is that we're probably seeing a lot of price action being priced in. And what I mean to say over here is that markets are front running, right? So if they are evident that the RBA is going to cut rates, most likely it's priced in, and that's probably why we're seeing at this stage where Aussie dollar is on a strength. But if you were to ask me a question, is RBA going to cut rates? I think most of the bank forecasts, the bank economists are calling for a rate cut, but the independent economists, they don't think RBA is mandated to provide a rate cut this time. And rightly speaking, our unemployment levels are pretty good. Our jobs is tracking on the right side. Inflation, it's come off in the last couple of readings, but in saying that, why should they jump in and cut right now when things are going well for them? So quite interesting for the RBA. Luckily, they don't have a Fed. Luckily, they don't have President Trump to answer to. Mm-hmm. So they're probably not under any sort of duress to react either.
Yeah, well, they're not meant to even respond to the local government, let alone the US president. But let's have a look at what we're seeing with the Aussie versus sterling, because you had that dovish comment coming through too from the Bank of England.
Yeah, I mean, especially yesterday's meeting where the Chancellor, Rachel Reeves, she appeared very, very, I wouldn't say pessimistic, but, the body language sounded like, it doesn't look very well for them. And again, the economy in UK has shown some signs of instability when it comes to unemployment. And so the gilt features pretty much sharply rose. So in saying that, I see Aussie pound at this stage, it has been around that below that 48 handle for a while. So now we're seeing it slowly trick up. I don't think we'll probably head towards 50 at this stage, but in saying that, momentum is rightly building up against in the favor of Aussie pound. So if people traveling to UK, maybe you can start looking at some flight tickets, but just don't jump and buy a ticket yet.
Yeah, all right. I think that's all of our young producers looking to their trips to Europe this summer. Thanks so much, Steve. That does it for this edition of The Trade. Be sure to join us again next time.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.